KPLC just released their half-year results, and I'm here to speak with the CFO, Stephen Vikiru, to unpack the numbers for you and get to understand what does it mean for you, the shareholder, and of course, what is the prospect and the quality of the company. Stephen, welcome to the show.
Thank you very much, Maina.
Great. So first of all, congratulations. You marked some profits. The last time we had a conversation on numbers, there was something happening, but you'll explain to us. And I wanted to understand first, what are the factors that led to at least you marking a profit in your release?
Thank you, Maina.
Yeah.
No, there are several factors that really drive into that profit performance.
Yeah.
And you recall, previously in our results, we had a reduced tariff, and that actually really impacted our top line and all the way into the loss that we made. Mm-hmm. So we are speaking at a period which we had a reversal of that reduction. We had a tariff approval in April 2023, and so this is the first half year period after that review. But also there was growth in revenue. We had a 2.7% increase in the unit sales, and that also went quite a bit into that revenue. The revenue jump is quite significant when you look at 31%. But also it's important to note that certain elements in that revenue are actually pass-through costs that are in the power purchase and then in the revenue. So when you look at revenue on its own, the 31% appears to be quite a jump, but also there's part of it in the power purchase cost.
Okay.
Yeah.
Okay, I appreciate. So majorly you accredited to the tariff that was already passed, right?
Yeah, quite a bit, yes.
Okay.
Yeah.
Excellent. Let's talk about this particular tariff, the review, and I wanted to understand the insights onto how this decision was actually made. And of course, we can see the impact, and because I'm sure there are lots of Kenyans who are watching today wondering, okay, are we expecting more tariff changes and all that, please?
Thank you, Maina. Actually, the tariff is a regulated, really, space quite a bit, and there is the Energy Act 2019 that prescribes the tariff control period, which is a 3-year period.
Yes.
And really, there's a lot of prudence that goes into the tariff review, the regulator and then the public participation and all that.
Okay.
So the utility is expected to be quite really efficient in terms of the way it's operating and all that. The costs that feed into the tariff are quite really regulated in that aspect. So getting into this specific tariff, there is a lot of movement and realignment that went into that particular tariff, because we've operated in a manner that previously the tariff control period was not honored. And so we were to have a tariff review in 2018. Indeed, there was a 1-year tariff review. Shortly after that, there was a reduction to allow for the lifeline. That's when the lifeline category was introduced. So there was quite a hit on KPLC, about 6.8 billion shillings at that time. It was expected that a year later, in 2019, we would have now the review for the 3-year period. That didn't happen. In 2022 January, there was now 15% reduction, 15% reduction that had to be again mitigated by the government stepping in, and also the other sector entities trying to contribute towards narrowing the kind of impact there. So when we come to the review in 2023 April, it was actually to try and really bring some cost reflectivity into this. You know, the way the tariff regime that we operate is it's a cost-based tariff, where you build up the costs right from generation, transmission, the distribution, all the costs for really getting the electricity to the customer. And then you get into now the customer categorization of customers to actually now really share that basket. So you have the various categories, the commercial, industrial, and all that, and that's how you arrive at a tariff. So I would say mainly the key issue here was that there are a number of tariff elements or costs that had come up during the prolonged period without a tariff review, and they had to actually fit in the best tariff. This is like the additional generation, that the solars and wind that came in, and we had not had a tariff review at that time, so those had to fit in, plus again ensuring that we have some cost reflective aspect of the tariff.
Okay. Yeah. Fair enough. And let's talk about now how you're planning to address the challenges of increased finance costs, particularly on the rise of in the unrealized foreign exchange losses that actually had hit you the previous time, especially on loan revaluations. How is that going?
The forex, unrealized forex losses has become a huge has a huge impact on the KPLC numbers. In the half-year period, the forex impact was about 11 billion in a half-year period. If you look at the last full-year period, 16 billion. So if you were just to extrapolate, if at all things continued the way they were going, we would be looking at close to 22 billion hit in terms of the unrealized forex losses. So maybe just a background on unrealized forex losses.
Yes, go ahead.
It is because of the loan portfolio that the company has. We have a loan book that is about 90% foreign currency, and this for the reason that about 75% of the loan book is on-lent debt, which is very concessional debt that is really guaranteed on-lent by the government from DFIs and other international lenders. So for projects, for expansion projects within the grid and all that. So all these are carried in the currencies of the lender, which is either euros or dollars. Now, the international financial reporting standards require that if you have dollar obligations or dollar assets and liabilities, at the reporting date you actually translate that into the reporting currency. Now it happens that at the time when we started off this financial year on 1st of July, the CBK reference rate for the dollar was 140. By December, the CBK rate was actually 156.8 or thereabout. So about almost 17 shillings shift. So even without taking an additional loan, the loan book has actually just grown by 11 billion. And that is the hit that we are seeing on the P&L. So back to your question around what we are doing around that. There's quite a bit of really focus on that exposure. And we have twofold exposure on the forex side. There is the finance cost that you've talked about, and then there is the power purchase cost, because again, the generation is actually foreign direct investment in a big way. So quite a bit of that, about 70%, is also in foreign currency. So our strategy to mitigate this, one, on the loan side, there is a refinancing of some of the commercial loans that are in foreign currency to Kenya shillings. That has gone on for a while. I think by the time we get approvals, the market is quite dynamic. Market has shifted and the lender is not willing to proceed. But now we are at a point where we are likely now to conclude the first phase of that refinance. Secondly, there is the balance sheet restructure that is driven by the government. And the restructure is aimed at two main things. One is the realignment within the sector for efficiency, such that we have KETRACO, who is the main transmission entity, take on substantively the transmission role in the sector, and then KPLC focuses on distribution. KPLC owns some transmission assets. So there is, and the second reason is really a very sustainable way of the government really to ensure that KPLC is sustainable, because KPLC is actually the off-taker of the sector, and the tariff, the bill that the customer pays, accounts for all the sector entities behind KPLC. So KPLC is a recipient of that, and they pay down to the generator, to KETRACO, to all the other sector entities. So in achieving that, the government thought it fit to use part of the loan book, the on-lent loan book that I just highlighted, that also is impacting on the forex, to transfer part of the assets, the transmission assets, to KETRACO. So what is expected here is that we do a valuation of the transmission assets, and KPLC has actually identified the specific assets for transfer. And then once the valuation is done, we initiate a transfer process, which would require the approvals, shareholders' approval, and even the no objection from the lenders and all that. And then that will be transferred to KETRACO, and the equivalent amount based on the market valuation would actually be reduced on the on-lent loan book. So KPLC would have a lower loan book, but then on the other side they will have transferred some assets to KETRACO. So that is the major really mitigation that we are looking at in terms of this forex. There is also the aspect of, I think it has come out in the media quite recently, but I think I would like to put some perspective to it. Where it's been indicated that KPLC has sought approval or is seeking approval for billing.
Charge people and
billing
people
in US dollar. That is not correct. That is not accurate. I would actually like to clarify that really the billing is in Kenya shillings. Kenya Power is a Kenyan company and supplying electricity to Kenyans and will bill Kenyans in Kenya shillings. What we are trying to do here is that we have customers who are mainly exporters, and we know them. We've done a desk analysis, and they receive most of their revenues in hard currency, and so they have to sell their hard currency to pay the bill, to pay taxes and all that. So what we are looking at is having this type of customers, giving them an option, so that they don't have to go sell their dollar to come and pay electricity, and then we go out there looking for that dollar. So if we have a reference rate that is based on CBK, or a reference rate that is really agreeable and well known in advance, these customers could actually pay that. So the approvals that we had initially sought and obtained were to open dollar collection accounts and not really to bill in dollar. So don't wait for a dollar bill. It's not coming from KPLC.
Thank you for the clarification.
Thanks.
One of the key things as you've spoken about efficiency is definitely, I had what you highlight a bit of restructuring, especially when you're releasing that. There is an ongoing restructuring within your organization. I just wanted you to explain it maybe in a bit, and how this aligns, especially with the perception. I think you mentioned it on the sideline, within National Treasury expectations of reducing the company's dependence on the exchequer support. Please give some breath on that.
Yes, Minor. Now, KPLC is a commercial entity. And if you look at the Kenya Kwanza Manifesto, I think there was a clear indication that one of the objectives within the energy sector for the government was to ensure that KPLC operates as a commercially viable entity. There's a bit of social obligations that KPLC has been burdened with over time. And so the key thing here is that there are entities or utilities within the sector that are actually supposed to carry those obligations. So the key thing here is that KPLC is not dependent on exchequer per se. The exchequer transfers that come to KPLC are usually for specific projects that are funded by the government. Key among those is last mile. KPLC is an implementation agency for the last mile program. So these are government program for connectivity, especially in the areas that are really not very economically viable for a commercial utility, and then street lighting. So there is quite some significant funding that the government itself and through some development partners actually has put into those kind of projects where KPLC is an implementer. Now, the dependency of KPLC on the exchequer, I think this is where now the issue of the restructure is coming in, because the previous assessments by Treasury really has been that KPLC is a strategic utility, and so its viability and sustainability is very key, not just to the sector but to the economy. So the restructure of the balance sheet here is to ensure that it has a long-term sustainable impact on KPLC. And recently we've seen the forex that we just talked about being the biggest impact on our P&L, on our financial performance. And so this restructure goes a long way in addressing not just the gearing of the company, but also the significant forex exposure, where we reduce quite a bit of the loan stock that is in hard currency. All
right, we take a short break right here, speaking to Stephen Vikiru, CFO KPLC. We'll be right back.